Welcome to the deep dive. We are exploring a really fascinating and honestly highly specialized subject today. It's centered entirely around one question from our source materials, which is, what does an SAP FICO consultant really do?
Right. And it's a great question because, it's easy for people on the periphery of enterprise IT to just assume this role is, I don't know, just back-end coding or maybe working through a never-ending queue of routine support
Yeah,
tickets.
exactly. The fix the printer IT stereotype.
Exactly. But the architecture of this role is actually deeply strategic. The sources really paint a picture of professionals who act as the digital architects of a company's entire financial nervous system.
That architectural framing from the text is just the perfect place to start. Because even if you, as a listener, aren't living in enterprise resource planning software every single day, understanding this role kind of pulls back the curtain. It shows how global logistics, corporate earnings, and multinational operations actually hold together.
It really does. I mean, we watch supply chains operate across borders, we see these massive corporations execute complex mergers, and we rarely consider the invisible digital infrastructure that makes it all mathematically possible.
Right. We just see the result, not the plumbing.
Yeah, the plumbing. And this deep dive really strips away the jargon to reveal that this infrastructure is this highly intricate blend of corporate finance, technological limitations, and surprisingly, human psychology.
Okay, let's unpack the acronym first
Yeah.
because we definitely need to establish the baseline parameters of the role before we get into the psychology stuff.
hmm
Uh, FICO is broken down into two heavily integrated halves, right? FI, or financial accounting, and CO, or controlling.
Right, FI and CO.
So we know from the notes that FI handles the external reporting. That's the compliance, the taxes, the parallel accounting frameworks. Like if a multinational corporation operates in Germany and the US, FI is managing the simultaneous reporting for local GAAP and IFRS.
Exactly. It's the outward-facing stuff.
But then the CO side operates under entirely different pressures. It is strictly internal. So how does a consultant balance those internal management demands against rigid external compliance?
Well, that tension is the core of the entire job. Because, like you said, FI is the official face the company presents to external auditors, regulatory bodies, shareholders. But CO is the internal mirror.
The mirror, yeah.
Right. Business leaders need granular, high-resolution data. They need to know the exact cost to manufacture a specific variation of a product in one specific factory on a random Tuesday.
And the IRS definitely does not care about the Tuesday factory costs.
They do not. The external world doesn't care about that level of detail at all, but for internal profitability analysis, that data is make or break. So the consultant has to architect a system where the transactional data feeds both the external regulatory beast and the internal strategic engine simultaneously.
And doing that without creating massive reconciliation nightmares at the end of the month, right?
Oh, absolutely. That's the nightmare scenario they're hired to prevent.
And I think this is where the translation piece comes in. The text often describes consultants as a bridge. But honestly, looking at these examples, it is much more like being a bilingual translator between two groups that fundamentally do not understand each other's languages.
Yes, the business side and the technical side.
Right. A business leader might walk into a room and say, hey, we need to dynamically track our localized marketing spend by region so we can pivot campaigns faster. But the software itself does not speak marketing strategy.
No, not at all. The software only understands logic gates and data tables. So the consultant has to take that abstract strategic desire and map it into derivation rules.
Map it into derivation rules.
Yeah. They are configuring the system so that when localized marketing spend occurs in the real world, it automatically triggers the correct cost center allocations and profit center postings in real time.
So the executives get their dynamic regional dashboard, which looks great to them.
Right, they get the shiny dashboard. But underneath that, the FICO consultant has laid miles of logical plumbing to ensure every cent flows into the precise digital bucket required by the controlling module.
It's fascinating. It requires you to take a client's somewhat vague desire for better visibility and translate it into actual load-bearing system architecture, which I guess brings us to how they actually build this digital house.
The ASP methodology?
Yeah, in the SAP world, projects typically follow the AC methodology or similar iterative life cycles. And the very first phase here is the business blueprint, or the discovery phase. And this is a phase that surprises a lot of people outside the industry, I think.
Because of the lack of coding.
Exactly. During this massive multi-million-dollar software implementation project, the consultant isn't touching the system at all. Zero software configuration is happening in the beginning.
And skipping the configuration entirely in the beginning is an absolute necessity. If a FICO consultant bypasses the blueprinting phase and just starts flipping switches in the back end, they run a really catastrophic risk.
What's the risk?
Yeah.
Just building the wrong thing.
Worse, they risk taking a broken, inefficient financial process and hard-coding it into a rigid global system. You have to truly understand the mess before you can digitize it.
That makes a lot of sense.
Oh.
So they are essentially running intense workshops with the business teams, mapping out the as-is processes versus the desired-to-be state. They're documenting every single manual workaround, every shadow spreadsheet the accounting team secretly uses.
Oh, the shadow spreadsheets. There are always shadow spreadsheets.
Always. And every bizarre legacy process. They have to ask, why are you doing it this way? And often, according to the notes, the answer is just, well, because we've always done it this way.
Right. And the blueprint phase is where you perform the fit gap analysis. You figure out where the standard SAP software perfectly fits the company's business processes out of the box, and where there is a massive gap that requires either custom development or, and this is the hard part, a fundamental change in how the business operates.
So you are negotiating the future reality of the company's financial operations on paper, long before anyone writes a line of code or configures a server.
Precisely.
Okay, so once that massive business requirement document is finally signed off, the theoretical gives way to the practical. We enter the realization phase, which is where the building actually happens. The consultant rolls up their sleeves and enters the IMG.
The implementation guide.
Right, the implementation guide. This is basically the backstage area of the software where the foundational master data and organizational structures are defined.
And when you open up the IMG, you really aren't just adjusting user preferences or changing font colors. You are defining the foundational company codes. You are charting out the entire global chart of accounts.
Which is massive.
Huge. You are setting up complex tax calculation procedures that have to hold up under international audit scrutiny. The decisions made in the IMG during realization dictate how the company will financially operate for the next decade.
It is the exact moment the blueprint becomes a digital reality. But you can't just build the foundation, put up the walls, and assume the roof will hold when a storm hits, right?
Yeah.
You have to stress test the architecture.
Which brings us to the testing phase.
Right. We have unit testing, where the consultant isolates a single function to ensure a specific configuration behaves as expected. But the real friction, the real drama, seems to happen during UAT, user acceptance testing.
Yes. The goal of UAT is destruction.
Destruction. I love that framing.
It really is. You bring in the actual business users, the accountants, the controllers, the regional financial officers, and you ask them to operate the system using real-world chaotic data. You want them to break it in a safe, sandboxed environment so that the system doesn't shatter under the pressure of the real world after go live.
So they will run negative testing. They'll try to process a return for a material that literally doesn't exist. They will try to backdate an invoice to a financial posting period that was closed 3 years ago.
Anything to trip up the system.
Yeah, they will push the limits of the tax configurations with these weird edge case scenarios just to see if the system throws the correct error message or if it completely crashes.
And if the architecture survives that onslaught, the project moves to the grand finale, which is go live and support. Immediately following the launch, the project enters what is universally known in the industry as the hypercare phase.
Hypercare.
Yeah.
That is such an evocative term. It perfectly captures the intensity and the high-wire act of flipping the switch on a new enterprise system.
Yeah.
The consultant is on absolute standby.
Hyper-focused.
Yeah, think about that from a personal perspective for a second. When you launch a big project, you hit publish and just hold your breath to see if it works or if you immediately get a flood of errors. Now multiply that feeling by a multinational corporation trying to execute its very first month-end closing on a brand new system.
The first month-end close is the ultimate crucible. Every single transaction, every inventory movement, every payroll run from the past 30 days, all culminates in this one process.
No pressure.
Right. The business is trying to generate their consolidated financial statements, and the FICO consultant is just monitoring the batch jobs, ensuring the ledger balances, and standing by to execute technical surgery the moment a critical reconciliation error flashes red.
But this massive multi-year implementation project is just one lens through which to view this job, right? What does a random Tuesday look like for a consultant tasked with maintaining and optimizing a live system? Let's step into the daily grind here.
It's a very different pace, but just as intense.
Yeah, because requirement gathering doesn't stop after the blueprint phase. The notes gave this great example. Imagine a consultant spending 2 intense hours in a room with a regional chief financial officer, exclusively discussing the new tax regulations in Brazil.
Brazil is a phenomenal example from the text because it is widely known across the enterprise IT space to have one of the most complex, rapidly changing tax frameworks on the planet. Oh, yeah. The concept of the electronic invoicing system, alongside localized taxes like ICMS and IPI, it creates an incredibly volatile regulatory environment. So a 2-hour meeting with the CFO just to understand the latest legislative changes is entirely realistic.
So the consultant has to absorb all that complex legal and financial jargon, understand the specific regional jurisdiction codes, and then figure out how to translate those new laws into the SAP tax procedure configurations before the deadline, because otherwise the company faces massive, crippling compliance fines.
Exactly. And that might just be their morning. By the afternoon, they pivot to issue resolution.
Oh, right, the support tickets.
Yeah. A frantic user sends an urgent message, "I can't post this incoming vendor invoice. The system is throwing a period-blocked error." And this perfectly highlights the consultant's daily operational dilemma. Is this just a user training issue, or is it a systemic configuration bug?
They basically have to put on their detective hat. Did the user simply try to post an invoice with the wrong date because they are still familiarizing themselves with the interface? Or did the consultant genuinely forget to roll forward the financial posting periods in the background configuration for this specific company code?
Two very different problems.
Right. One scenario requires a polite email to the user with a screenshot of the correct date field. The other requires an immediate back-end fix so the entire procurement department isn't bottlenecked.
And to solve that puzzle, the consultant has to understand where the data originated, because financial accounting is the ultimate downstream recipient of almost every single action a company takes.
Everything flows to finance.
Everything.
Yeah.
Which brings us to the I in FICO, integration. A FICO consultant absolutely cannot operate in a silo.
They are constantly collaborating with other specialized module consultants. The sources specifically mention MM, which is materials management, and SD, which is sales and distribution. The FICO architecture has to seamlessly catch the financial impact of what those other departments are doing.
It's all connected.
Let's walk through the mechanics of that integration, because this is where the system gets incredibly complex. When the procurement department buys raw materials, a whole chain reaction occurs.
A single inventory movement in materials management triggers automated, instantaneous journal entries in FICO. When the goods receipt is posted at the warehouse dock, the MM module registers the physical inventory. But simultaneously, the FICO module has to automatically debit the inventory account and credit a clearing account.
Without anyone pressing a button in finance.
Exactly. The consultant configures what is known as automatic account determination. They are mapping out the exact general ledger accounts that should be hit based on the material type, the valuation class, and the specific plan.
The same massive chain reaction happens on the sales and distribution side, right? If the SD consultant configures the system to process a massive sales order for 1,000 widgets, the FICO consultant has mapped the revenue account determination. When the goods are shipped, the system automatically credits inventory and debits the cost of goods sold. When the customer is billed, it debits accounts receivable and credits revenue, while automatically calculating the localized tax based on the shipping destination.
It is an intricate web of cause and effect. The FICO consultant has to ensure that the revenue hits the exact right profit center, the tax jurisdiction is calculated flawlessly, and the inventory valuation updates dynamically without a human accountant ever having to manually type in a journal entry.
To navigate a web of cause and effect that dense, a FICO consultant relies on a very specific triad of skills, a required tool belt, as the source outlines.
Right.
And the first element of that tool belt is pure domain knowledge.
Which means you must actually understand deep accounting principles.
Right. If you don't know the difference between straight line and declining balance depreciation, or you don't understand how parallel ledgers function for international consolidation, you simply cannot configure the software to do it.
You cannot build the house if you don't fundamentally understand the laws of physics. You aren't just an IT professional, you are a finance professional who uses enterprise technology as your primary medium.
And that financial fluency leads directly to the second required skill, which is analytical thinking.
Because the system is a massive puzzle. Since everything is so heavily integrated between MM, SD, and FICO, making a localized change in the system is almost never isolated. The consultant has to constantly exercise systems thinking.
Asking themselves, if I change this one derivation rule in the controlling module here, How does it affect the external balance sheet way over there?
It is the butterfly effect applied to corporate finance. You tweak a valuation class setting to fix a minor reporting issue in the US, and suddenly a manufacturing plant in Germany is completely unable to post their daily inventory movements because the account determination is now broken for their specific material types.
A great consultant holds the entire integrated architecture in their head and anticipates the downstream ripples of every single keystroke.
They have to.
But the most surprising element of this tool belt, and perhaps the most vital, is the third skill. We've talked about deep accounting knowledge, we've talked about complex system configuration and analytical thinking, but the final essential skill is soft skills. The consultant operates as a change agent.
We can look at this through a really specific lens from the text. Imagine a veteran warehouse manager who has been with the company for 20 years. They have a massive, complex Excel spreadsheet filled with custom macros that they built themselves.
Their baby.
Exactly, they trust it completely. Now, a FICO consultant walks in and says, "We are replacing your spreadsheet with this new global SAP interface."
From the warehouse manager's perspective, that SAP interface looks like an immediate threat to their routine, their expertise, and potentially even their job security.
Yeah.
People inherently resist having their professional equilibrium disrupted. Even if their old process was highly inefficient and prone to errors, it was familiar. They knew all the workarounds. Now, their daily routine is being turned upside down.
The consultant cannot just hand them a technical manual and walk away. They have to socially engineer the manager's buy-in. They have to sit down, understand the specific anxieties the manager has, and demonstrate exactly how the new system benefits them personally.
Show them what's in it for them.
Right. They have to show the manager that their Friday afternoon inventory reconciliation, which used to take 4 grueling hours in Excel, will now take 10 minutes with an automated SAP transaction.
They have to sell the vision of the to-be state. Because it does not matter if the consultant builds the most technically perfect, beautifully integrated, mathematically flawless financial system in the world. If the business users are terrified of it or resentful of the change, they will passively reject it.
They will find ways to work around the system, input garbage data, and the entire multi-million-dollar transformation project will fail.
So the consultant has to actively manage that human resistance and guide the workforce through the transition.
Which culminates in a very specific, fascinating ratio that defines the reality of this career. To be successful, the role requires a precise blend of disciplines. It is widely considered to be 40% finance, 30% IT, and 30% psychology.
That 30% psychology is the glue that holds the highly technical 70% together. You can master the finance and you can memorize the IT architecture, but without the psychology, the implementation falls apart.
It really does.
So as we wrap up this journey into the architecture of enterprise systems, it becomes incredibly clear that a FICO consultant is so much more than a technologist. They are the architect designing the global financial blueprint. They are the bilingual translator, turning abstract business strategy into rigid software logic.
The systems thinker anticipating the butterfly effect.
Yes, and the workplace psychologist, managing the friction between human habit and digital transformation.
It completely reframes how you look at the invisible infrastructure running global business, and it leaves you with a critical, lingering thought to explore on your own.
What's that?
We tend to think of enterprise software and massive financial systems as the ultimate domains of cold, hard logic and pure mathematics. But if a highly technical IT role requires a full 30% of its focus to be on human psychology just to manage our innate resistance to change, what does that tell us about how deeply intertwined our messy, emotional human habits really are with the supposedly cold, logical digital systems we build to run our world?
That is the perfect question to end on. You simply cannot separate the human from the machine, no matter how complex the architecture gets. We want to thank you for joining us on this deep dive into the real mechanics of SAP FICO. We hope it gave you a sharper perspective on the intricate systems operating quietly behind the scenes of the global economy. Until next time, keep exploring the architecture of the world around you.